I'm Jon Schwartz, Los Angeles realtor and investor, and this is the first ever Investment Property Nerd weekly Los Angeles real estate market update. I promise I'll come up with a shorter name later. So obviously the first question is, why weekly market updates? Aren't monthly market updates good enough? And the answer is, yeah, sure, they are. A month is a good chunk of time to look at the real estate market, see the trends, and come to conclusions about what's going on. But here at Investment Property Nerd, we like to get really nerdy with the data and see if we can identify the trends as they're happening. Now the caveat, of course, is if you're looking at the market on a weekly basis, you might not be able to draw conclusions about what's happening. You might not be able to say this is definitively why we're seeing this. However, we can still see the trends as they're unfolding, which I think puts us a step ahead of other investors. So let's take a look at the graphs. Just got to start recording my computer screen. So first we look at single family listing activity, and what this is showing us is the number of listings entering and exiting the market each week. This graph right now covers 7 weeks. I do need to go back in time and add some back data. Eventually we'll have a chart that shows 16 weeks at a time. Now the blue areas show listings that are added to the market by way of new listings. The red areas show listings that exit the market by way of pending sales. These are sales that are under contract and no longer soliciting offers or showings. They are, unless escrow falls through, off the market. And then finally, the gray areas show expired, canceled, or withdrawn listings. These are listings that exit the market without a sale. Finally, the yellow line is the net change in listings on a 4-week trailing average. I'm sure all of you are familiar with the COVID case graphs that have the bars for each day of cases and then the line, which is the 7-day trailing average. Well, in this case, the line is a 4-week trailing average, and it just smooths the trend so that we can really identify it with our eye. So what can we identify? Well, as you can see, each week the market has actually shrunk by 200 to 400 listings. This demonstrates that we're still in a very good seller's market. There's a lot of competition amongst buyers because there's not a lot of inventory, and that trend is continuing into the winter. We can also see the week ending 11/28, which was Thanksgiving week, there was a significant reduction in activity, but it came back strong the week following. One other takeaway is over the last 3 weeks, the net changing listings has risen from about -400 to above -200. That's a good thing. If this trend continues, it means we might actually get some equilibrium in the market, which would make things a little better for buyers. It's still very much a seller's market, but at least the trend is heading in the right direction. All right, next graph. So this is the same graph, but for condo listing activity. And I separated single families and condos because there's two different markets going on right there. A lot of people are leaving condos to move into single family homes, leaving urban core areas of Los Angeles to move out into homes in the valley or even further. So what do we see here? Well, we see basically the same thing. Activity shrunk during Thanksgiving week. It bounced back last week. And over the past 3 or 4 weeks, the net change in listings has gotten better for buyers from about a -150 to about -25. So, hopefully this trend continues and the market will improve for buyers. Next chart. Finally, this is the same chart, but for multifamily listing activity. Once again, the blue areas are new listings coming to market. The red areas are listings that exit market because they've gone pending, and the gray area is listings that have exited the market because they're expired, canceled, or withdrawn. Once again, we see reduced activity Thanksgiving week that bounces back the week following. However, you'll notice that the yellow trend line is much closer to zero throughout and is getting a little bit closer in the last couple of weeks. This suggests that the multifamily market is not quite as competitive on the buy side as single family and condos. There simply isn't as strong an imbalance between supply and demand, between listings on the market and buyers scooping them up. That's good for multifamily buyers. All right, next chart. Here we have the median days on market for the 3 major property classes that we're covering, multifamily, condos, and single family, over the past 7 weeks. As you can see, median days on market for single family residential has stayed very consistent over the past 7 weeks. For condos, median days on market has decreased slightly from about 18 to 15.5 median days on market. Now, this might speak to the fact that people are beginning to see the lower price points that condos are being listed at and going after them. That's good for condo sellers. And the biggest move on this graph, of course, is multifamily median days on market, which 7 weeks ago was above 30 and now is down below 22. Why are multifamily properties selling a lot faster now than they were 7 weeks ago? To be honest with you, I'm not entirely sure. The eviction moratorium is still in place, the rent freezes are still in place. But this is an interesting trend to be aware of for sure. All right, next graph. So here we have list price to sales price ratio for the same three classes we were looking at before: condominiums, single family residential, and multifamily. List price to sales price ratio is a good indication of how strong a market is. In a strong seller's market, you'll see very high ratios, close to or even topping 100%, meaning that buyers are paying more than properties are being listed for. In a declining market, you'll see list price to sales price ratios start to decline. Usually it takes sellers some time to catch up with where market appetite is. As we can see here, all three property classes have rather high list to sales ratios: 98.25, 99.54, and 99.77, and they've been relatively constant. A little bit of wiggling in single family, a little bit of a dip in multifamily, but broadly speaking, this speaks to a strong seller's market. Next chart. So this last chart is the one we've all been waiting for: pricing trends. What is happening to pricing? Now, the gray line represents multifamily properties priced as dollars per unit. The blue line is single family residential, but it's priced as dollars per square foot. And the red line is condos priced dollars per square foot. So why am I looking at single family and condos as dollars per square foot and multifamily as dollars per unit? Well, when you're comparing properties that aren't necessarily very similar, you want a common denominator. In single family residential and condos, dollars per square foot makes sense. In multifamily, I like to look at dollars per unit so I can get a sense of, broadly speaking, what a unit is trading for. So in this graph, we see that price per square foot in single family has dipped a little bit over the past 7 weeks. We see that price per square foot of condos has actually begun to climb over the past 2 weeks, and that multifamily pricing has dipped quite a bit in the past 7 weeks. So what does this tell us? When we look at this chart with the other charts in mind, it explains why multifamily properties are selling faster. People selling multifamily have finally realized they can't get the price they were getting before, so they've dropped their prices and buyers have come to buy. Single-family residential and condos also sees some price movement, but it's not significant. I'm going to keep an eye on the condo trend though, as price per square foot is on its way up. All right, so that is the first ever weekly Los Angeles real estate market update. This one was a little rushed, but honestly, I wanted to get it out to you. I've been working on this for a couple weeks. I think it's going to improve each week, and in a couple weeks, we'll really have our bearings. So thank you for watching. If you have any suggestions or any ideas, please leave them in the comments below. I want to hear them. I'm going to make this better week by week until it's an invaluable resource to Los Angeles investors and homebuyers. I'm Jon Schwartz, and this is Investment Property Nerd.